Good evening. This is Ken at Tortoise Capital with the review of the daily trading plan for 27 February 2018. Still bull volatile. We're in the middle of the annual range for overbought, oversold, and also in the 10-day NDX. Market mosaic, white bullish on the price relative to the 200. The slope of the 50 is yellow neutral. ADX remains a strong 31.5, bulls in charge. Risk index is up to 0.999, still barely risk off, but that's only got a z-score of minus 0.1, so we've pulled all the way back basically to zero. So this has been favoring the swing trade here the last week or so, but that's been quite a 10-day move, as we're going to see, and it would not be unusual to see that pullback like we saw today. Because of the vigorousness of this move, though, I exited a lot of positions at fractional losses and some scratches and some fractional gains today, just to reduce my overall exposure. My feeling is that being back to normal, there's likely to be a resetting and possibly some more selling pressure here. And so I wanted to have smaller portfolio heat and refocus my attention on some of the clear winners. No signals in channeling and overreaction. Max Payne's, Walmart, GE, Disney, Coke, Verizon. Just Walmart on a channeling and overreaction. You can see the pain in Walmart here. Procter & Gamble has started to recover a little bit, but you'll notice there wasn't much to choose from today. This was weakness across the board, with Nike, Disney, and Merck especially hit hard. Intel and Boeing. Not surprising with Boeing leading the way. Only gold in the auto framer. Also channeling an overreaction. Technology has been the leader, along with oil on the 10-day basis. But still not a lot of leadership showing up here. Pinch and stretch. Intel, Cisco have been the strength leaders here. Intel, Cisco, Apple, Technology, Microsoft, and the Qs out of the top 10. That should get your attention. Negative Z stretches. Walmart, Coke, Devon Energy, McDonald's. Chevron and ExxonMobil, so that tells you weakness in energy. No super pinches yet. Just a couple in the auto framer, Walmart and gold. Regression line fractal framework. Top shelf for the symbols that are the most ATR below their own RL270. That's the number of ATRs. And bottom shelf, these are the deep value plays that many ATRs, or I'm sorry, my apologies. Deep value on the top shelf. Bottom shelf, the ones that are the most number of ATRs past their RL270. Daily squeezes, quite a few to choose from. Pepsi, Win, Apple. An ordinary pullback under most times, but after moves like this, it's hard to say that we're back to normal yet. I like the fact that the RL30 has now rolled up and crossed its own 10-period moving average, and the stretch has gotten back to normal. So this is really, I look at this sort of as a clearing of the deck of folks that made money during this 10-day period. Now, we'll see if it's going to make a run to 286 or if this is the new normal at 276. We were due for a pullback on the 10 period. When you look at the steepness of that curve, it's just unadulterated gains right there. That's this move. It's a heck of a 10-day move, and it's finding that little sell-off right here at the Bollinger Band mean. That's all it is right now. And that's everything I want to cover on the daily. Let's take a look at the portfolio management. First things first, these are the FAQs for the advanced swing course that are due to be answered for lesson 8. Technical elements of the wide range of swing systems that we're working our way through. Just a reminder, price on that goes up on 1 March. And you can lock in that price now with a down payment, which counts towards the payment later on. And you get the FAQs with that down payment, so low risk. So I just want to start with SPY, just to show where we are in terms of the overall market. So this was that big sell-off. We got 1, 2, 3, 4 positions short and covered. And then we're back here long. First position, second position. Here we tightened up that stop. We took a third position long here. And today was this bit of a sell-off. I'm going to cap that loss to be right there. So that if we hit that tomorrow, the second and third position are a wash. The first position is a nice gain. This is where I'd add the fourth position. After this MACD histogram has gotten well below the 0 line, we cross the 0 line and are now facing upwards. So I'm still viewing this as support of the Bollinger Band mean. All we saw here was a move from Z2 back to the Bollinger Band mean. That's the reversion to the mean that you're entitled to expect. That's the least surprising move of all. And that's how I'm interpreting this, this selling. Although it did get weak towards the end of the day. Long term, I do like the fact that the PSAR is flipped and we've made some bank here. If I was better, I might have gotten this exit, but that's where we are right now. I'll continue the portfolio management for all of these symbols in the stack for the advanced swing course guys. We do that, 3 or 4 times a week. But I want you at least to see where I think we are in terms of the market volatility. So, Ken at Tortoise Capital, keep your risk measured and your powder dry.